The so-called big, beautiful bill facing a final House approval vote in the coming hours. Joining us now is Treasury Secretary Scott Bessent. Mr. Secretary, thank you so much for joining us. We're going on more than 6 hours now where Minority Leader Jeffries is speaking. What are you hearing? What's your expectation for when and whether this could pass?
Well, it's gonna pass, and my expectation is that we'll get a vote around 1:30 today.
Got it. You have said that this isn't a drag on the deficit, despite the fact that CBO has scored it pretty aggressively, that it will add $1 trillion to our public debt. You've told me before, and you've told everyone that you're a fiscal hawk. So how do you square that? That's a key question, I think, that they're asking on Wall Street.
Yeah, well, I square it with I don't believe in the CBO forecast. So, Sarah, let's just look at common sense and logic that if the bill, for some reason, hadn't passed, we would have had the biggest tax hike in history, and the CBO would say we're going to grow at 1.8%. We're going to make expensing and for structures and equipment permanent, and we are going to have the biggest tax cut in history. And the CBO is still saying we'll only grow at 1.8%. So if you turn up the growth projections to something like 2.8, 3%, which was achieved during President Trump's first term, then the debt disappears. The other thing, too, is are we growing the GDP faster than we're growing the debt, which I am sure will happen over the remainder of the president's term.
We've been talking to economists about the GDP, because I know that's what you're saying, is that they're underplaying how much this could add to economic growth, and therefore that'll help with the debt picture. We've been asking economists about it. Hard to see a 3% number on most Wall Street forecasts right now. How do you get there? Because I get deregulation is going to help, and I get there's some stimulus here, and the clarity will be helpful. But then there's also tariffs, which could hurt.
Then let's think about this. You can't have it both ways. If tariffs going to hurt the economy, then we're going to pick up, according to CBO, if you want to take CBO scoring over the 10-year window, we pick up $2.8 trillion in revenue. And what we've seen so far is that tariffs haven't hurt. The dog that didn't bark was that tariffs going to hurt the economy. We're going to hurt the markets. Market had the fastest recovery ever, from the low in April, from a 15% decline, and we're at new highs in the market. So I've made my career on listening to the market, not Wall Street economists. So I'm going to stick with what the market's telling me.
Mr. Secretary, it's great to be with you today. And as you're saying, the market's at all-time highs, and perhaps even more insightfully, the bond market's very, very calm as we sit here now. Does that not even indicate to you that you could push the deficit more if you wanted to? I mean, America's probably the only country in the world that could be talking about a 5 or 6 or 7%, even if it's only in the short-term deficit, and see bond markets as calm as they are.
Well, unlike the previous administration, we don't see the need to do that because we think that we can get private sector growth going. And President Trump's agenda, as I said many times, is a three-legged stool. So it's trade, it's tax. So we're going to complete the tax today when the House votes, and then the president will sign it tomorrow. And I think the permanence and the stimulus from that, and then an important part is deregulation. That is slower moving, and I think those are going to kick in the third and fourth quarter. So we want to bring down the deficit to GDP. We don't need these huge amounts of government spending to keep the economy going. We want the private sector to do it like it did in President Trump's first term.
So is Elon Musk completely wrong? Have you called him to tell him that he's campaigning on the wrong issue on this bill?
As I've said in the past, I have great respect for Elon on rockets. I will leave that to him. He can leave the finances to me.
Okay. Well, you mentioned the other leg of the stool, which is trade, very much in focus now. On the framework that President Trump announced on Vietnam yesterday. I'm curious if you could tell us a little bit more about that. Has Vietnam agreed to it? And those 20% tariffs, where they send it over to us, is that on top of the 10% tariffs that we already have? How does it work?
It's not stacked on top of the 10%. That's the reciprocal rate.
Right. So this would just be 20% tariffs that with goods coming from Vietnam into the U.S. as part of this deal.
Yes.
And is the deal finalized?
I haven't spoke to Jamieson Greer, who's heading the team. My understanding is that it's finalized in principle.
I guess the question is so far we've had some responses from retail, from the Footwear Association. I mean, they manufacture a lot in Vietnam, in part because the last Trump administration got them to shift out of China into Vietnam. That's going to be a higher cost of doing business for them to bring that product into the U.S.
Well, look, we've seen that a huge amount of the trade that comes from Vietnam is what's called transshipment from China. So we'll see what happens with the transshipment. And the businesses have already adjusted to a 10% tariff. So we'll see what happens with the additional 10. But thus far, we haven't seen any inflation from tariffs. And again, I would say that tariffs are not inflationary. You could get a one-time price bump. But in terms of a generalized economic inflation, I don't think that tariffs cause that.
But it has to come from somewhere. I mean, are you expecting to see it then in their margins, margin pressure on U.S. corporates, especially retailers that import all this stuff?
Well, why couldn't it come from the producers in Vietnam who want to keep market share?
So you think that's what's happening? They're negotiating with their suppliers?
I think they're negotiating with their suppliers. I think many of the apparel companies, their margins became abnormally high during COVID. So maybe one thought is we'll see a normalization there.
What about other trade deals, Mr. Secretary? Because we're getting close to that July 9th deadline on Wednesday. Are we going to see more of these type of deals between now and then?
We are. Of course, everyone waits till the last minute. They think that they can get the best deal. And as I've warned when I've done other media, these countries should be careful because their rate could boomerang back to their April 2nd rate.
On that note, Mr. Secretary, the EU Commissioner-in-Chief Ursula von der Leyen tweeted earlier saying that we're ready for a deal. Should we expect the EU deal to get over the line by Wednesday?
We'll see. Again, I'm not going to get out in front of the president. It'll be his decision. I did meet with my EU trade counterpart this morning. Ambassador Greer will be working diligently over the weekend. So we'll see what we can do with the European Union.
So it sounds like that's suggesting that one's in a better place than, say, Japan. We all obviously followed the president's posts on Japan over the course of the last few days.
Look, Japan are great allies, and they are in a tough spot right now. They have an upper house election on July 20th, which I think gives them a lot of domestic constraints in terms of doing a deal. So we'll see where the Japanese deal goes.
I just want to follow up on something you just said. You said that otherwise it'll revert back to the Liberation Day tariffs, which were very high. So is that what's going to happen if there aren't trade deals in place? I think previously you've said that as long as they're negotiating in good faith, the 10% sort of will carry over. You'll extend that kind of deadline. What's your latest thinking here?
My latest thing is we're going to do what the president wants, and he'll be the one to determine whether they're negotiating in good faith. So I'm not going to give people a 10% extension on national TV when they should try to get it across the finish line.
On international TV, no less.
Global TV.
Exactly. And no doubt being watched in EU capitals, in Asian capitals, because the deadline's looming. I'm really interested on the baseline and what people might expect long term if everything goes to plan over the next 2 weeks. Obviously, we've got two numbers we can focus on: 20% Vietnam, 10% that you did with the UK. Is the UK only got 10% because they were early, because they came with love and friendship? What is the EU or Japan, if they agree to all the terms, is it more likely to be splitting the difference between those two numbers, or what?
Again, I'm not going to talk about the deals on intergalactic television, but the UK came to the front of the line. Very, very good deals. I'll tell you, they negotiated very, very well for the British people, and I think both sides thought that it was an excellent deal.
Let's talk about the jobs report, because we got a pretty positive report, at least on the headline number. Unemployment rate goes down to 4.1%. You have been flagging the wages for blue-collar workers. You know, a lot of people didn't expect to see that at this time in the cycle, with the Fed being restrictive, with the tariffs in place. What do you think is leading to the resilience in the job market? And do you have any concern about what's under the surface there as far as where those jobs were created?
Well, a lot of the jobs were created by state and local government. And again, in my previous life, part of my job, part of my team's job, was to take apart the economic data. And I can tell you, any 1 month is very noisy. I thought overall it was a good number, but a lot of the numbers like this can depend on when were teachers hired, when did they come off the payrolls. So, but I would say the overall trend is good. But what I'm really focused on is once the president signs the one big beautiful bill tomorrow, the acceleration that I think we're going to see right out of the gate here in terms of the private sector. When I go around the country, or CEOs come into Treasury to see me, they've all been held captive by a lack of certainty on this tax bill. And now that they know that they can have 100% full expensing on equipment and for factories, I think we are going to see things take off between now and Labor Day.
So in the job market in particular?
Well, I think in the CapEx market, which leads to the job market. So, it'll initially be construction jobs, and then that we will see the workers come in to fill those new plants.
The market is taking it as reduced likelihood that the Federal Reserve would cut interest rates as soon as July, looking more toward the fall, because the feeling is that the economy is in good shape, jobs are still in a healthy place. Why don't they wait to see whether the tariffs are going to be inflationary this summer? Why is that not a prudent approach for the Fed?
I just look at the Fed's previous models, and based on their previous models, they would have already cut. So we'll see if they want to make a mistake here and not cut, then that's fine. We are at very high real rates here, but again, it's their decision, and I just think if they don't cut, then perhaps the cut in September will be bigger.
Mr. Secretary, it's really interesting that you say if they want to make a mistake, your framing of it, that's fine. I guess it shows a different scale of view towards commenting on Fed policy between you and the president, in that you're kind of leaving it up to them. You think it's fine, it's up to them. Do you ever regret the extent of Mr. President, of the president's commentary towards Jay Powell?
Not at all. The president is the most economically sophisticated president, certainly for 100 years, perhaps in history, and he has been quite right in his commentary on the Fed during the previous 4 years. And again, I think that the statement that Chair Powell made from the conference in Europe, where he said, well, we would have cut if it weren't for tariffs, that I'm not sure why Team Transitory thought that the gigantic fiscal spend coupled with added regulation would not cause inflation, and somehow that tariffs, which haven't caused inflation, and if they were to cause a one-time price adjustment, nothing's more transitory than that. But again, as I've said, I'm going to try to stick to mistakes they've made in the past, which in 2022 was huge, and As I've said before, medical studies have shown people who fall down tend to look at their feet. You look at your feet, you fall down more often, and I got a feeling they're still looking at their feet from 2022.
Yeah, fighting the last war, as we've seen with regulators. So do you think that they're being political? Do you think that Fed Chair Powell is political?
I think that it's a vote of the FOMC, the voting members. So we'll see. There seems to be a big dispersion in the so-called dot plot, the summary of economic projections between the Trump appointees and the non-Trump appointees. I'll let you read into that what you want.
No, I pointed it out before. Waller and Bowman pushing for a July cut. So, your name gets floated out there. You have some odds on Polymarket of being the next Fed chair. Can you be a Fed chair and a Treasury Secretary at the same time?
Well, I think it hasn't been done since 1930-something, and I'm very happy in my job here. I think we have lots of good candidates for Fed chair. We will start working on that in the fall. We've been busy. The president's been doing peace deals, trade deals, tax deals, and we are landing the plane on all of those. So we're going to have more bandwidth after Labor Day.
That was not a no. I just want to point out on the double job. Very interesting. Secretary Bessent, thank you for the time today.
Good to see you.
And happy 4th of July.
Happy 4th, yeah. What looks to be a historic one.